All right, so our first topic on the agenda is to talk about how the Washington State Bar Association is funded. So I'm going to turn it over to Chief Regulatory Counsel Renata Garcia and our Director of Advancement, Kevin Platchy, who will present together.
Thank you. Good morning, everyone. Is the audio okay? All right, thanks. I think we are dividing this presentation, so I think I'm going to go first, and then I'll turn it over to Kevin. I have some slides to share, and I think Julie's going to help me with that.
It looks like General Counsel Shanklin does not have this set of slides. Are you able to send them to her quickly?
Yes.
It's a Saturday morning. And then yes, Rex, let's make her a host.
Did you get it, Julie?
She's still looking, but she thinks so.
All right, that's great. Thank you, and sorry about that. So once again, my name is Renata Garcia, Chief Regulatory Counsel for the Washington State Bar Association. Thank you for having me today. I'll be providing an overview of how the organization is funded. So on the next slide, I'll show you the roadmap for the conversation. So essentially, I'll be focusing on the general fund and the client protection fund, and my colleague, Advancement Director Kevin Platchy, will be covering CLE and sections fund. So on the next slide, I'm gonna go over some of the basics, just so we make sure we have the same framework to work with. The first one being the status of the organization. So the WSBA is not a nonprofit. It's not a state agency. We operate under delegated authority of the Supreme Court to regulate the practice of law. Because of that, we are exempt from paying taxes because we are considered an instrument of the government in a way. And based on what I have seen, other mandatory bar associations range anywhere from a 501c6 to a government agency, to a judicial agency, public corporation, and then like us, an instrument in a way of the government of the court. So the other thing I think would be good to cover is that we operate on a fiscal year, not a calendar year. And I think that's important to cover because things like the license renewal process that we have is based on a calendar year. So we will talk a little bit about that later. In terms of the budget, we are looking at an expense budget of close to 25 million, and that's for all 4 funds. And once again, I'm going to cover the first 2, the general fund and CPF, and then Kevin will cover the other 2. So then if we move to the general fund, so I thought it would be good to start with the purpose. So like what's the general fund supposed to fund? So essentially, it's to support all regulatory functions and member and public services that we provide, right? So to fulfill our regulatory responsibilities and to help members succeed in the practice of law. In terms of revenue and expenses, general fund revenue comes from mostly, license fees, but also other types of fees like admission fees, MCLE fees. So MCLE, not to be confused with CLE, right? We're talking about the mandatory continuing legal education. Things like advertising, recovery of discipline costs, section administration reimbursement. So this is not a comprehensive list, but just to give you some examples. And then obviously in terms of expenses, they're essentially the cost of doing business, and those are divided into direct and indirect expenses. So for the direct expenses, we are looking at the actual cost of conducting, carrying out a certain function or program, and indirect expenses, things like salaries, benefits, overhead. And for the fiscal year 22, we are looking at a deficit budget close to 90,000. That may or may not be the case, right? And maybe it's worth highlighting too that this does not take into account the unrestricted general fund reserve that we have, which I believe is at 4.4 million right now. So I'm not planning on covering reserves, but that's just something to keep in mind. So if we move to the next slide, we are talking about license fees, right? So license fees, the main source of funding, as you can imagine. I would say on average, about 75% of the annual general fund revenue comes from license fees. I don't have a slide for what I'm going to say now, but I think it's worth mentioning that this is pretty similar to how other mandatory bars of similar size, they are similarly funded in terms of percentage coming from license fees, which I think the average of the other 6 mandatory bars of similar size is about 70% of the revenue coming from license fees, and we're about 75. So just going back to the chart, I think it's helpful to, obviously that shows the past 10 years, right, in terms of license fee amounts. Maybe it's worth noting that you can see there was a little drop, right, like maybe a 30% drop from 2013 to 12 to 13, right? And that was the result of the referendum on license fee. And we were able to maintain that reduction for 3 years. And that was by reducing spending and also using reserves. We are now at 458, and we, for 3 years now. And if you add CPF, so 458 is the license fee, but the cost of practicing law in the state, you got to add the CPF. So we are looking at $478. In case it's helpful for comparison with other mandatory bar associations, it ranges anywhere from 265 to 660. And that's the total cost of practicing, not just limited to license fees. So I think we can move to the next slide. So this slide is just to give you an idea of how the funds we get, the license fee funds, right, the revenue, 16.5 million, how those are being used. So as you can see, 6.7 is funding mandatory functions. Mandatory, not everything that's mandatory is regulatory. So we'll talk about that at another presentation. It includes things like discipline, licensing, admissions, and Supreme Court boards. And then 5.3 million funding non-mandatory functions, things like member benefits, publications, public service programs, outreach and engagement. And then we have 4.5 million supporting the overall organization management, right? And management and operations, like organizational costs of just doing business. And those are things that benefit the organization as a whole, right? So for example, technology, accounting, HR, the Office of Executive Director, and the BOG, right? So all of those things are counted as in the 4.5 million. So when we applied those percentages to the $458 that members are paying, so Julie, I think if you press enter, it will show the per member amount in a way, right? So 185, 186 essentially going for mandatory functions, 147 for non-mandatory functions, and 125 for the general organization, operations and management. Thank you. So maybe I should also say that this slide is not to say that if we were to perform only mandatory functions, for example, that the license fee would be calculated, to cover the costs, 186 plus 125 or something like that. I think it would be a much more complex analysis than that, and something that I did not explore. I just trying to provide an overview of what it is currently. But I think just taking pieces of it and then adding the operations might not really tell the full picture of what it would take to run in a different structure. And then the next slide, it's a pie chart to illustrate how the general fund, which includes license fee and other revenue that we are going to cover, how that's being used to support all the WSBA programs and services that we are providing, right? Those are expenses only, right? Just how much things cost to run. It does not include how some things are paid for, right? That's just the expense. We have over 30 cost centers, but if you count, we probably have about 12 categories listed here. And that's because I grouped some of them for ease, right? For example, admissions and licensing and MCLE are combined into licensing and admission. Supreme Court boards are combined. So we're not gonna do a deep dive into each category, right? That's something, if you think it would be helpful, we can come back and provide additional information or have a presentation specific to talk about cost centers. But the purpose here was just to give you a visual, just an idea. And I think it's also important to keep in mind that those categories, those figures can change depending on how we are categorizing things and how we are grouping them. So based on the categories I used, that's what we are coming up with. So the next slide, we'll talk about like the revenue, where it's coming from, right? So we already covered the 16.5 is coming from license fee. So where's the other 4.8, 4.9 coming from, right? So the other pie chart was about expenses only. This is about revenue only, right? So how the other 4.9 million, what are they coming from? So again, those include all the categories that we have for additional funding sources. And I can give you some examples. So admissions, for example, it's supposed to be something that, you break even, right? Only to cover the costs, not to bring more money for the organization. So while the total revenue, you can see there, it shows 1.3 million. We have about 1.287 in expenses anticipated for this year. So it's essentially just to break even, to cover the costs of running that function, right? So not to bring in additional revenue. Not every function brings sufficient funds to cover it, and that's why we have the general fund. The next slide, I think we can look at revenue and expenses side by side. Thank you. So this shows the past 10 years. And I think if you look at pre-2013, we were building up reserves. Then you can see starting 2014, using those reserves quite a bit and starting to build up again in 2018. And I think 2018 is when we increased the license fee from 385 to 449. So if you look at the 2021 expenses, you can see they went down quite a bit compared to the year prior. And we think that's probably a result of COVID, right? For example, no in-person bar exam hearings, BOG meetings, conferences, a lot of things in programming changed, so reduced the cost quite a bit. But we can see now as we are moving, back to providing some of those functions in person, the cost of the expense going up a little bit. And I think that might conclude the general fund portion of it, and then we can move to the client protection fund. So the client protection fund is here to compensate folks who are the victims of dishonest taking, or a lawyer, TOOT, or LPO's failure to account for property, right? And it does not cover malpractice claims. Payments are discretionary, and they must be approved by the CPF board. And I think when it's over 25,000, they're actually approved by the Board of Governors, right? The BOG is serving as a trustee for the fund. The CPF, as I mentioned before, is it's funded by mandatory annual assessment, which is $20 right now. And if you look at the budget, it breaks down the costs of running the program, and the expense part includes an anticipated amount for the gifts that we might be giving in a given year. And I think for now we are anticipating 500,000 in gifts. So I think it's important to note though that just because we're anticipating to be giving $500,000 in gifts, it does not mean that the board could not approve more than that. So in this situation here, I think it's interesting because the budget is not serving as a ceiling, right? The budget is just a prediction, and the CPF board is not limited by that. What they are limited by is it's what's in the fund. And I think the next slide is going to show that amount, and it's 4.2 million. And you can see, I think I have the past 10 years. It's the mandatory assessment went from $30 to $10, right, last year, and then now it's back up to 20. So you can see that the fund is going back up with that assessment as well. I think that concludes the presentation. Not sure if you have any questions for me. If not, we can transition to Kevin for his portion.
I see there's a comment in the chat. Do you want me to go ahead and read it? This is from Governor and President-elect Clark. He notes that additional information regarding WSBA finances in FY 2020 and FY 2021, despite having 2 years of projected losses and expenses exceeding revenue, we ended up having ultimately net increases both years in the range of 800,000 in FY 2020 and 1.51 million in FY 2021. FY 2021 was, I believe, a record increase in the net proceeds to the WSBA General Fund. Additionally, the first quarter of FY 22 has seen a net increase in the general fund of $586,800 in revenue over expenses. This may be lower though, as typically we have increased costs in the second half of the fiscal year.
Are you ready for me?
Yes.
Okay, Rex, could you make me a
Please
co-host,
proceed.
please? Rex, could you make me a co-host?
You should have that now.
Right. I am going to try and share my screen. All right. Can you see my screen?
Yes.
Okay. Thank you. Well, good morning, everyone, governors and guests. My name is Kevin Platchey, and I'm the director of the Advancement Department here at the WSBA. And I'm going to be talking today about the Sections Fund and the CLE Fund. And for everyone's information, the CLE operation and the administration of the sections falls within the Advancement Department. So we oversee those operations on a daily basis. What I plan to do today is review the Sections Fund and the CLE Fund and talk about how both those funds are funded, how they receive their revenue, and then also talk about how they relate to one another. And then finally, I'll spend some time talking about how these two funds relate to and contribute to the general fund as well. So I'll be talking about the section fund first, and then we'll move to the CLE fund and talk about it. So, and what I hope is that this presentation will help lay the foundation for the May meeting when you, the governors, are looking at scenarios for the structure. Hopefully this gives you a better idea of how these funds interrelate and also how they relate to the general fund. So the sections fund, just some sort of information to get us started. The sections fund comprises the reserve balances of all 29 of the WSBA sections. So the reserve funds are accounted for the fund balances are accounted for each section on an individual basis. We keep a running account of those. But the section fund itself is comprised of the reserve balances of all 29 of the sections. The first WSBA section was formed in 1973. And in fact, 3 sections were formed in 1973. That was the admin law section, the health law section, and the intellectual property section. The last WSBA section to be formed was in 2017, and that was the cannabis law section. The section pays a per member charge to WSBA, and that covers most of the direct and indirect costs for WSBA support. And I'll be talking more about this a few slides down. At the end of FY21, there were about 16,000 section memberships. And then at the end of FY21, there were 369 section leaders serving on section executive committees. So among the 29 sections, there were 369 members of the bar who were serving on section executive committees running their individual sections. And then finally, the section fund will cover $70,821 of WSBA overhead in FY22. And I'll talk a little more about this when we dig into the details of the per member charge. The next thing we're going to move to is a history of the section fund balances. And so what this slide is showing is history of the fund balances for each individual section, but then also the total of all sections from 2015 to 2022. And if we scroll down to the bottom, we see the total section fund balances for each of these years. One thing to point out, we do have a graph of the section fund balances here. And you can see that starting in FY20, the section fund balances started to grow. And we can attribute that to the COVID pandemic, much like expenses went down for WSBA in general because we couldn't participate in in-person things that usually come at a higher expense. The sections were facing the same thing. And so as of December 2021, the section fund balance sits at $1,518,867. A little bit about the section fund balance on the history of it. The section fund balance was established in 1994 by the Board of Governors. And at that time, the Board of Governors made a designation of section funds, and that fund balance is subject to the control and fiscal oversight of the Board of Governors. And then per fiscal policy, it is recommended that the section's fund balance equals 6 months worth of direct programming expenses. And then under the same fiscal policy, sections are discouraged from maintaining reserve balances in excess of 2 years of direct programming expenses. And I would say that probably some of the sections are getting close to are exceeding that amount strictly because of the COVID protocols that have been in place that just really restrict the types of things the sections can do at this point. So that's a little history of the section fund balance. The next thing we're going to move to is sort of talk about how these sections earn their revenue. And I've got a table here that breaks down the revenue of the sections from FY17 through FY22. And really, there's two primary ways the sections earn revenue. The first and foremost way is through their dues. So the sections assess a dues independent of the license fee to members who want to join the section. Those dues are set by the section, of course, with the oversight of the board. The dues range anywhere from $25 to $40. So some sections charge $25, some charge $30. The most that are charged by a section at this point are $40 for dues. If you look in this column, this row right here, this is the largest amount of revenue earned by the sections, and that is the total of section dues revenue for each year. And for FY22, it's budgeted to be $439,178 across all 29 sections. Now, the second highest income earner, revenue earner for sections is CLE revenue. And the sections earn CLE revenue in a couple different ways within the WSBA. The first is by developing in partnership with our WSBA CLE operation, half-day, full-day, or multi-day CLEs under our fiscal policy. And under the fiscal policy, the sections work with WSBA CLE to develop the CLE programming, and then there's a section split that is provided to the sections. And how that works is the live revenue that's earned from a seminar is compiled and aggregated with the on-demand revenue that is earned from a seminar over 3 years on our CLE store. That total revenue is tracked, and the indirect and direct expenses associated with the seminar are subtracted from the total revenue. The net revenue that is then left over is split according to fiscal policy between WSBA CLE and the sections. And under the fiscal policy, it's split 50-50. Net revenue is split 50-50 up to $8,000, and then split 35-65, 35% to section, 65% to WSBA for net revenue over $8,000. So in this row here that I'm highlighting is the splits that are paid under this fiscal policy to sections. We did, to make a note, there's a low figure here in 2019 because in FY19, the fiscal policy changed to this new structure of sharing both live and on-demand revenue. And there was a lag time basically for on-demand revenue to catch up. And that's why there was a dip in the splits in 2019. And you can see a gradual increase of section splits from 2020 on because the pipelines are being built up of the on-demand revenue. The other way sections deliver CLEs to their members is through our mini CLE program. And mini CLEs are short programs. They can't be more than 2 hours long. And the charge for them is $35 or under for the entire program. And the sections partner with WSBA CLE on the delivery of those mini CLE programs. Sections do most of the program development, do all of the program development for the CLEs and deliver the CLE on the day of the event. WSBA staff support the CLE administratively by having it accredited through MCLE, issuing Form 1. Then they set it up for registration on our WSBA CLE store, same with any other seminar that we set up. And then they offer after seminar support by reporting credits for the members and that type of thing. So under the mini CLE format, a lot of the sections offer those CLEs free to their section members. So they're really considered a member benefit. And if there is any revenue earned from mini CLEs, the sections keep that revenue. And in FY22, sections are budgeted to earn around $36,000 on mini CLEs. And then some sections actually partner with other outside entities to deliver CLEs. That's a little lesser amount, but in FY22, that's budgeted to be about $8,000 of revenue for the sections. So as you can see from this table, the primary ways in which the sections earn revenue is through their dues or through CLE income. And then just to point out, in FY22, the sections are budgeted to earn a total of about $600,000 in revenue, and that's across all 29 of the sections. The other thing to talk about, that's the revenue sources for sections. The other thing to talk about is what are the primary expenses for sections within WSBA? And the primary expense for sections is the per member charge. And the WSBA assesses a per member charge to sections to account for the support that WSBA provides administratively to the section. So it's basically payback from the sections to WSBA for administrative support. And I'm going to get into this in more detail in the next slide to give you a breakdown of what the FY22 PMC looks like and what is incorporated within it. One thing to point out is the section per member charge, the actual per member charge is shown in this row that I'm highlighting here. You will notice that in FY21, the actual section per member charge went down fairly significantly. It went down from, in FY20, from $23.48 to FY21 to $18.18. And the reason for that reduction is that was around the time when our executive director, our current executive director, was promoted to interim executive director. I was promoted to interim advancement director, and we had a couple of open management positions in the department, and we made a decision to eliminate 2 management positions within the advancement department and consolidate them into the 3 remaining management positions. And because a big part of the PMC, which we'll see a little later, is associated with salary and benefit expense that of staff who support sections, because we were able to pare down some of that staffing on the management level, it reduced the amount of salaries going into the PMC, which had a result of lowering the PMC from $23.48 in 2020 to $18.18 in 2021. And the way the PMC is assessed is that per member charge means that for every section member, that's the charge WSBA charges the section for the administrative support. So if a section has 500 members and the PMC is 1818, then it's 500 times 1818, and that's the amount assessed to the section for the support. The other thing to note is even in years where the PMC went over $18.75 per member, the board made a policy decision to keep it at $18.75. So at least for the past 6 or 7 years, the PMC, even though it may have actually been higher than $18.75, has never gone over that. So the applied per member charge that the board approved to actually charge the sections has not been over $18.75 for the past 6 or 7 years. And when it came in under in FY21 at $18.18, that's just what was assessed. And then in 2022, the PMC came in at $18.92, and the board agreed to keep it at the applied rate charged to the sections of $18.75. So historically, it's never gone over, for the past 7 years or so, it's never gone over $18.75. So what exactly is in the PMC? I'm going to show you a memo here that was sent to the section members that details the FY22 PMC. And this does a pretty good job of showing sort of what's incorporated in it. So what are the sections paying for and reimbursing WSBA for? And the first thing is salary and benefits. So this is the salaries and benefits for the staff who directly support section administration. And as you can see here, there are a total of 2.58 staff that are allocated into the PMC charge. That 2.5 includes a third of the member services and engagement manager, who is the manager that supports the staff who support sections, and she also supports other work within her team that isn't associated with the sections, and that's why only a third of her time is allocated into this amount. Then we have a sections program specialist and a section program coordinator that directly works with the sections on a daily basis. That accounts for 2 FTEs. And so the total there is about 2.33, and the remainder of the 2.58 that's assessed for staffing is administrative and bookkeeping accounting support that is provided by WSBA for the section. So there's 2.58 FTEs that are directly reimbursed by sections through the PMC to the WSBA General Fund. The next area that the sections that are included in the per member charge is overhead. So overhead are listed, the kind of categories are listed here of overhead. And as Renata Garcia said earlier, overhead is really what generally supports the organization: IT, rent, HR expenses, those kind of things. And they're assessed on a per FTE basis. So because 2.58 full-time employees are allocated into the section support, they're assessed overhead based on the 2.58 FTE, and the per FTE overhead comes out to be $27,450. So the total overhead that the sections are contributing to the WSBA in FY22 is about $71,000, $70,821. So that's what the sections are contributing back for their support to the general fund. And then there's just direct expenses that are associated with the PMC, and the direct expenses are pretty minimal. Sorry, I'm trying to get to them. The direct expenses are around $9,800, And that includes due statements that we send out. If we have large section meetings like the section leader spring meeting and the fall meeting, it would be a cost associated with putting on those meetings. And that's estimated to be $9,800 about in FY22. So when you come down to the total of the PMC, the salaries and benefits are $208,784. The overhead that's sections are contributing back to WSBA is $70,821, and the total expenses that are included in the PMC charge are $289,479. That's what it's budgeted to be for FY22. And in the prior slide, you can see the PMC amounts that were paid in prior years. They range anywhere from $213,000 upwards of $325,000. So in FY22, it's estimated to be around $287,000. All right, so that is the PMC, and I think that's going to conclude the presentation on the section fund. So just to summarize, the sections fund revenue sources, the two main revenue sources are section dues and CLE revenue earned in partnership mostly with WSBA. And then expenses are those expenses, the largest expenses are those reimbursed back to WSBA per the per member charge. So that kind of wraps up the section fund. I'm going to move now to the WSBA CLE fund. And the WSBA CLE fund is another board designated fund. So it's on it again is under the oversight of the Board of Governors. This WSBA CLE fund is set up primarily because the CLE operation is self-sustaining. And what that means is within the CLE fund, the operation within the CLE fund does not rely on license fees to operate. Instead, it relies on its own revenue generated through live seminars and on-demand CLE revenue. And the CLE fund comprises any net income left over from the CLE operation at the end of a fiscal year. It rolls into the CLE fund. And the CLE fund is really maintained for a couple reasons. One is because the operation is self-sustaining, it's important that a CLE fund balance is maintained to help the operation sustain market fluctuations that may occur. And also because this operation is very technology heavy, it allows us to also maintain and keep up with technological advances that we need to maintain for future purposes. So the CLE operation actually develops about 65 to 75 programs live each year. All of those are sent, most all of those are converted into an on-demand seminar that then lives on the CLE store for up to 3 years. And so the main sources of revenue for the CLE fund are the revenues through the live registration fees and the on-demand CLE seminar revenue that's earned over a 3-year period on the WSBA CLE store. And we have about right now 652 on-demand CLE products on the WSBA CLE store. The other thing to note is that WSBA desk books are also a part of the CLE fund. So any cost of operations for the desk book operation are contained within the CLE fund and do not affect the general fund. And as a whole, there are 9.92 WSBA staff allocated into the CLE fund. And when we talk about staff allocated into the CLE fund, that isn't just like 9 individual people. The allocation into the CLE fund is a portion of people's time that do work to support the CLE operation. So for instance, there are 3 people in our communications department who are allocated partly into the CLE fund because they support marketing and other things associated with CLEs. In our accounting department, there are some bookkeepers allocated partly into the CLE fund because they assist with accounting functions, billing, and that kind of thing for the CLE operation. We have conference services staff that are allocated partially into the CLE fund because they support CLE programming. And then a large portion, of course, of our CLE staff are also allocated into this fund and operation. But in total, it's 9.92 WSBA staff. And we'll talk about what that sort of means because the CLE fund will cover about 283,000 of WSBA overhead in FY22. And that's directly associated with the number of staff that are allocated into that operation, which I'll talk about a little bit more towards the end of the presentation. So the next slide is just giving you a history of the CLE fund balance. And you'll notice in the graph here that in FY15, the fund balance was down to about $53,000. In FY16, you'll see it started growing and it's maintained pretty well after that. In FY 2016, there was really a renewed focus by the CLE team on the self-sustainability aspect of the operation. So more diligence was put into understanding the level of programming we needed to sustain the operation, to build back up the CLE fund. And so you can see in FY 2016, the fund was moved up to 456,568. It fluctuated a little bit. Where it's landing right now at the end of FY 21, there was about 648,000 in the CLE fund. As of January 2022, the CLE fund has 1.356 million in it. We don't expect that to be the final number at the end of FY22, mainly because the first 3 months of this year were very heavy revenue months for us because it was October, November, December, and that's the time when this double reporting MCLE group was fulfilling its MCLE requirements, and we had a tremendous amount of revenue right at the beginning. We don't expect that to maintain, but we do expect the CLE fund balance at the end of FY22 to be somewhere around $950,000. So that's what we expect by the end of FY22 for the CLE fund balance. The next slide is really to give you some information on how the CLE fund and the section fund are very interrelated. They almost have like a symbiotic relationship with each other. And I think the best way to demonstrate this is to show the amount of revenue that's earned by the total CLE operation. And then those CLE programs that I talked about before that are done in partnership with the sections under our fiscal split policy, to take that revenue that's associated with those programs and show you what percentage of revenue total from the WSBA CLE operation is attributed to the section CLE programming that we develop in partnership with them under the fiscal policy. So section lives, so in these years, and I've got this going back FY17 up to FY22, you'll see the total CLE live revenue that was earned by the WSBA CLE operation. And then above it is the total section live seminar revenue. And that's the revenue that's attributed to the sections, to the programs that were developed in partnership with the sections. So as you move across here, it's easy to see that a fairly substantial amount of revenue is associated with those section programs. So in FY20, it was about 65% of the live revenue total was attributed to sections. In FY21, it went down, it was a little lower, 37%. And in FY22, it's budgeted that section programs, the live revenue from section programs will likely be about 47% of the total live revenue earned by WSBA CLE. Same with section on-demand revenue and total on-demand revenue. So the total on-demand revenue earned by the operation as a whole is here, and then the section on-demand revenue is here. And again, you can see on-demand revenue, section on-demand revenue associated with section on-demand programs was about 60% in FY20. In FY21, it was around 56%. It's projected to be about 49% in FY22. So, and this makes sense when you think about it, because a lot of the section programming is substantive programming. It's substantive programming on how to practice law in a specific area. And what we can say for certain is that member demand for substantive CLE programming is much higher than the demand for any other programming that we do in WSBA CLE, with maybe the exception of our kind of anchor flagship ethics programs that we do on an annual basis. And then just to break this down into programs, in FY21, WSBA CLE produced 69 programs, half day, full day, multi-day. Of those 69 programs, 21 of them were section programs that we developed in partnership with sections. And then we developed a total of 383 credit hours of programming in FY21, and about half of those credit hours were attributed to section programs. So this hopefully gives you a flavor of sort of the interrelation and interdependence of CLE and sections because of the nature of the partnership between them and the type of programming that sections develop. It really amounts to a significant part of the CLE revenue. Now, the last thing I wanted to talk about with the CLE fund is sort of how does the CLE fund impact the general fund? And as I said before, the CLE fund pays a portion of WSBA overhead. And again, it's assessed on a per FTE basis. So what I've got here is the December 2021 CLE cost center. And I just wanted to show you the number one, the number of FTEs allocated into the CLE cost center itself, which is 8.42, at the equivalent of 8.42 FTEs. And then indirect costs in the CLE fund are down here in this section. This is salaries that are budgeted, salaries and benefits that are budgeted to be paid within the CLE fund for FY22. And then here, this other, if we scroll over here, it says other indirect expense. That other indirect expense is overhead. And that's assessed on a per FTE basis, so that the WSBA CLE operation will be paying around $239,000 of WSBA overhead in FY22. That's not all of it, because we still have the desk book cost center, which is here. So with the desk book cost center, there are 1.5 FTEs associated with the desk book cost center. And again, desk books are part of the CLE fund. So these are the salaries that are covered within the desk book cost center and benefits. And this 43 921 is the overhead that's picked up by the desk book operation based on the FTE basis. So the total of that the total overhead that the CLE fund is picking up, WSBA overhead, is 282,923. That's the total overhead that that the WSBA CLE fund is contributing to in FY22. So to kind of summarize here, the sections fund is currently a little over $1.5 million. Sections pay most of their direct and indirect admin costs back to WSBA through the per member charge. And then sections pay approximately $71,000 of WSBA overhead. That's the amount in FY22. The CLE fund pays approximately $283,000 in WSBA overhead and pays salary and benefits of approximately 10 WSBA employees, 9.92, that support the program of the operation. So, so I think that pretty much wraps up the presentation, and I hope this gives particularly, excuse me, particularly the Board of Governors, a good understanding of how these funds interrelate with each other and the way that they cover their costs and contribute back to the general fund. So that when May comes and we start looking at scenarios, you understand how all the parts fit together, so that if we look at changing them, we can understand how pulling them apart might impact different things. So I'm going to stop there and see if there are any questions.
Looks like Governor Adewale has his hand up.
Thank you, Mr. President. Thank you, Kevin, for this presentation, and thank you, Renata. These are very, very good presentation. Kevin, I have a question for you. Some of these CLE connected to the section conferences, the annual conferences of these sections, or are they just regularly scheduled CLEs? What brings in more attendees? CLE that are connected with the annual conference of sections, or just regularly scheduled CLE that people randomly selected because they needed to complete their CLE?
Well, so I'll try and answer that. So under the fiscal policy, WSBA CLE partners and splits revenue with the sections on all of their CLE programming, with the exception of mini CLEs. That's a whole different kind of program. So yes, it does include section mid-years, for instance. So that is all part of the CLE fund. Section mid-years, like the RPPT mid-year, the solo small conference, small firm conference, the family law mid-year. So yes, it includes conferences and regularly scheduled CLEs that we deliver throughout the year. The total of those programs last year was 69 total programs, and those included half-day CLEs, full-day CLEs, and multi-day conferences.
Thank you.
Any other questions for Chief Advancement Director Kevin Platchey? Well, thank you very much for that presentation. I think we're up to where we were going to take a break. We're a little behind time, but why don't we take a break? 15? How about 10? 10-minute break, and then we'll reconvene in 10 minutes, which would be 10:25.